He is research analyst at CFC Seymour, joining us live from our studios up in Hong Kong. Mr. Wu, good morning. Good to see you. Is that what we're going to see when the Shanghai market opens up in 5 minutes' time? An actual the market could advance, you think?
I think the Shanghai stock market is very bullish now because, as I said in July, that the investors has got confidence, has they regained the confidence due to the strong support of the first half year's performance of the Chinese economy. I think the reason why the sell-off is not so great in Chinese market because the Chinese capital market is relatively isolated, and the subprime crisis and the policy worries have been offset by the really strong performance of the Chinese companies.
Sure.
And I think the PBOC's measures, I think they target at an overheated economy and the liquidity rather than the stock market, and the market is used to that already.
Okay. All right. Yeah, I mean, this has got more evidence that the Chinese stock market almost seems to often trade with a mind of its own there. And again, point taken that the tightening measures have been aimed more at, let's say, reining in fixed asset investment, the main driver behind red-hot growth, as opposed to the stock market. You said a couple of seconds ago that there's a lot of momentum in this market. One interesting trend that I've noted is, the buyers have been not so much the retail investors, the punters, but what we've been seeing over the last couple of weeks is big institutions coming in to do buying. Are you noting this trend as well?
The retail investors, they really put all their feet into the market, and the FI, they are trying to do some reposition, and they are ready to buy some very good blue chips. So the coming back of 20 billion blue chips to the market, I noticed that kind of a trend, which means the market is gradually changed from the market-driven to value-driven, and the retail investors, I think they have put all their money in the stock market. Why? Because the CPI, the recent the inflation hike really worries the government. But one thing we should be happy that the stock market can relieve this kind of worries because the people can really get some money to offset that inflation pressure from the trading stocks.
Good place to make money. Mr. Wu, hold that thought. We'll come back and talk more in just a bit after these words right here on Squawk. Don't go away. Wu Gongliang, research analyst at CFC Seymour. He joins us now from our studios up in Hong Kong. Mr. Wu, we left off talking about how the momentum behind this market is a lot more because of institutions doing buying as opposed to retail investors, punters now, and also because a lot of the measures we've seen from Beijing to cool things down have been directed more at the economy as opposed to the stock market. As far as corporates are concerned in terms of earnings, you were saying that there's a lot of good strength there as well. Off the back of the latest earnings season, 50, 60, 80, 90% rise in terms of earnings. Can corporates keep that kind of earnings momentum up when we know for a fact that, and you talked about it yourself, inflation is on the rise, and probably more importantly, export prices in China are showing signs of creeping higher as well?
I think the result for the first half year of a Chinese economy is really solid. I have to say it's really solid and much more solid than that in 5 years ago when the PE ratio was that time was over 50. Now the leading PE is 40 and the PEG ratio is still under 2 based on the foreseeable strong growth of the Chinese economy. So I think that momentum is really strong. Even the tightening policies will take some impact to the company's growth. I mean, the bank will curb the loan for some small and medium companies maybe, but the strong momentum I think still will support the whole market. And the PBOC's measures, as I have ever said, it's a kind of the rate hike is they follow the CPI, and they want to curb the overheated economy. And the Chinese government is trying to curb some low value added and polluting products. And they don't want to slash the index or curb the whole economy, but they want to change to reform it gradually. That's the way they do things.
Sure, absolutely. Incremental change there, slowly as she goes. Let's get back to the market. There you see the composite right now, 46.08. That is a fresh record high, folks. A fresh record territory for this market. Finished up Friday up 3.5% at a record close, 45.60. But we're doing much better business than that now, which leads to my question, Mr. Wu, and that is, ahead of the Party Congress, ahead of the Olympics, etc., the government wants to cool things down, not just the economy, but also for the stock market. What is a realistic level that you think they would be comfortable with? Is it 4,600? Is it 4,300 or what?
the number is not so important. 4,600, even 5,000 is not so important. The most important thing is that the index should be a little bit volatile and be follow the whole economy and should not go up so rapidly. That is the way will be more acceptable by the PBOC and by the government rather than how much it will go up. Sure, everyone is happy to see it go up.
Sure, but I guess they want to measure the pace of appreciation. Sounds like what they're trying to do with the renminbi as well. Let me talk to you about this, and this is longer term. We have news from Dow Jones that Chinese and U.S. officials are sitting down, holding a series of meetings, trying to bring accounting methods in line, which would eventually allow for the cross-listing of companies, Chinese companies in the U.S., U.S. companies in China. This is, of course, a long-term goal, but already from the start of this year, back in January, we've had 1,400 publicly traded Chinese companies switching to a new accounting standard or method. This is the British standard, the IASB, International Accounting Standards Board. How much of a problem, though, Mr. Wu, tell me, is the fact that China really doesn't have nearly enough certified public accountants?
This kind of reform, I think it's a long way reform because the Chinese government have taken into account for a really long time, because you have to introduce the local companies to overseas markets, and the Chinese government is really want to the overseas big companies or even to go stock market in mainland China. So it's a two ways going, and the reform of the accounting measures, sure, it will not take more than 1 year or 2 years, because it take a really change or the accounting reporting stuff, procedures, and what is more, you need a lot of good professionals to do that. And Chinese people, they are not so familiar with that accounting standards. So it will really take a long time, but it's have to do with things that Chinese really want to do more about the stock market or the whole economy.
All right, it's probably a good time to draw viewer attention to this interesting statistics. 10 million accredited accountants in China, only 140,000 of them, though. Just a little bit over 10% are CPAs. 600 candidates sit for the CPA exam in China every year. So there you go. Mr. Wu, we'll have to leave it there. Good to talk to you. Wugong Liang, research analyst at CFC Seymour from our studios live up in Hong Kong. That market set to get up and running.